Here's what's coming up on today's show.
Staying retired is a different animal. Retiring is a choice. One-time decision, I'm going to retire. Staying retired takes action and work and support, and some of these things are going to work in opposition.
Welcome to the Income for Life Show. If you're looking for some common sense retirement planning ideas and want to hear how we make the complex financial world simple, then listen up so you can learn how you can stay retired. The Income for Life Show is powered by Folds of Honor, a 501c3 nonprofit organization dedicated to providing educational scholarships to the families of America's fallen and disabled service members. Now, here are your hosts, Matt Nelson and Nick Schilling.
Welcome to the Income for Life Show with your host Matt and Nick here on a very soggy, wet week that we're having here in the Midwest. We appreciate you taking time to visit with us today and to listen to what we have on the Income for Life Show, powered by Folds of Honor. And as usual, I'm here with Mr. Nick Schilling. Nick, how's your week been? And have you been able to stay dry?
Hey, Matt, week is going great. I'll take rain and warmer weather. So it's fine. The farmers hopefully have able to get in the field and everything's going good. So, yeah, I'm excited. It's
springtime.
Yep.
Yeah, it's springtime. This is what we should expect. And yeah, we had some nice days there. It was last week, I believe. It was beautiful, approaching the 80s, and now it's a little bit cooler because it's rainy, and I'm sure it's going to be coming back to warmer. So welcome to the Midwest. This is what we do.
It's raining. Gives me an excuse not to go chop up a golf course somewhere.
There it is, yes, because we were talking about that. Maybe we can get out there and do a little bit of golf this week. Well, no. Little soggy, little wet. But that's all right. It could be worse. Hopefully where you're listening today, you have a good day going and some good weather where you're at. And today, what we're going to be talking about here on the Income for Life Show is a topic that, Nick, you and I really enjoy discussing, just kind of on the outside looking in when it comes to alternative investments. And should people ignore them, or should they jump in with both feet, really jump into these? So we talk about these kind of the top 5 or 6 core alternative investments all the time. So we're going to discuss those today. And also we're going to give our opinions of where those alternative investments maybe fit into a retirement plan, if at all. Some do, some don't.
Exactly. And I think over the past 12 months, the framework of it has changed a little bit. It's no longer just, investment and financial people talking about it like you and I, Matt. It's become more mainstream as the conversation. So more and more people are asking questions about why are they talking about this? It started with GameStop, and there's continued things of what's happening in the investing world and what are these new things. Well, they're new to the general public, not new to you and I, Matt, but they're becoming known to a greater population of people. We just want to talk about them because we've had clients ask questions. We think people will get some good information on it.
And whenever you're planning for retirement, as we talk about here on the Income for Life Show all the time, where we talk about the 3 C's of retirement, the checkbook, the calendar, and the clock. You have to have that completely solidified and permanently established for retirement. A lot of these alternative investments are just not feasible on a guaranteed sort of a side. So we're going to talk about that.
And nobody's talking about the tried and true ways to plan for retirement. They're talking about the shiny, glossy stuff. It's all the sizzle. So that's the stuff you see in the news. We want to talk about why we view it as just sizzle for most of our clients and how they can look at it.
And sometimes the old way is the best way, the tried and true way of managing your retirement and having your retirement income. The nice, easy, safe, clean way is sometimes the best way to go.
It's not as quote unquote sexy, but sometimes it's the way.
That's exactly right. So we're going to talk a little bit about these alternative investments later on in the show. We also have a very good question that we're going to discuss that came in from Dave in Boston on our IFL top question of the day. So we're going to review that here in a little while as well. So Dave, if you're listening, thank you for submitting that question. We'll get to you a little bit later in the show. But before we really get going on this topic, we have to discuss what is top of mind with a lot of people right now, and this is this new upcoming American Rescue Plan, also known as another stimulus round.
Exactly, and it's it's been in the hopper for a while. It finally just passed through, signed by the president. It is the number that we thought it was going to be, almost $2 trillion. But it's going to help and stabilize the economy. We can talk about how, and I think we'll touch on, Matt, some of the specifics as to how this $1.9 trillion is going to be divvied up. But what it's going to do is kind of give the overall stock market and our economy another shot in the arm, another boost, which then we got to plan for that.
There it is.
As retirees, we got to plan for what's going to happen in the short term and then what's going to happen in the long term. We can debate the semantics of the plan all day long. The plan is what the plan is. Now we got to take that information and start to do it.
And now it's moving forward, and it's been signed, and the checks are going to be going out.
Checks are probably coming out soon.
There's a lot of people out there that are saying, boy, I wish we would not have done this most recent stimulus plan. There's other people that are saying we absolutely need this last stimulus plan. There's other people that say we need more of this. So there's so many different things that are all over the board on this. But let's talk about this one and just some of the details, because I believe this was signed in by President Biden on March 11th. And what this the main thing that people are talking about is the $1,400 stimulus checks that are going to go out to the eligible individuals.
Correct.
So the eligible individuals are a little bit different. I believe it's is it 75 to 80,000 in income and below?
Correct.
Are going to be able to get this, or 150 with couples, right?
Correct.
So those are the people that are going to be getting this $1,400 stimulus.
Agree. And I think it's under $75,000 as an individual gets the full $1,400, and I think it completely phases out at about 80 grand.
Got it.
And then couples, it's double that, 150, and then 160, it starts to phase out.
Starts to phase out after that.
Yeah.
Looks like they're also included $300 weekly unemployment benefits to September 6th, so they're going to have that extended a little bit more. We also got the $3,000 per child tax credit, which is $3,600 if under age 6, so that's in there as well.
Yep.
We also got the 15% increase on food stamp benefits and increased federal health care subsidies. We'll see how that plays out on that. $70 billion to increase vaccine and testing capabilities. I think that we would all agree that we need to have as much resources as possible going to, sadly, the vaccines and the COVID history and studies, so that's an important thing to do. $30 billion in rental assistance and evictions and forbearance through September as well. That's obviously people are going to be struggling with that moving forward as well. And $57 billion for small businesses and communities, and then of course $350 billion for states, tribes, and municipalities. So there's a lot built into this $1.9 trillion that some people are saying it's not enough. Some people are saying it's too much, but I guess we all kind of agree that something needs to be done.
Yeah, the checks to individuals seems to get all the press, but I think the real meat of this is the support of businesses, people that are renters and mortgage and all those things, trying to save those industries and help the people that need those things. So we're not having another huge layoff. I think airlines, Matt, don't you have a brother that these are helping employers keep employees on?
Correct.
And helping people that need assistance to stay on that assistance. We can debate around the fringes as to should we send out checks? Who should get checks? All those, and we could debate that all day long. I don't think there's much debate that schools and all these programs, vaccines, need assistance. And that's probably the meat of where this bill is. And that's going to then support the overall economy even more than just the checks are going to support the economy.
Correct. And with the small businesses, especially where they're trying to keep their doors open, they're doing everything that they can do, and we're struggling even before this on a lot of them, before
Correct.
This pandemic even going. There's just so many things that have changed and some that will never return. So I understand the reason and the justification for getting this money out there to the individuals.
Yes.
I understand that there's a lot of people that are struggling, and this $1,400 could come at a very good time for them.
Correct.
But I really want to see a bulk of this go to those small businesses that can really try to get this economy back to where it needs to be, because we got a long ways to go.
And another difference with this bill that is unique is the $3,600 tax credit for those families with children, I think 6 or under.
Correct. Yep.
So those young kids that need that support and the families that need to support them, that tax credit come tax season, which is right now, should be able to help some of those families and be, I think, a little bit more focused than just a check.
Right. And let's hope so. Let's
Yep.
hope that smart heads prevail.
Correct.
And this money is divvied up in a way that that is clean and easy, transparent, and makes sense to everybody. So we wanted to spend just a little bit of our time here at the beginning of the Income for Life show just to discuss this most recent stimulus package and kind of how the numbers shake out. We kind of did that pretty quick, but I think everybody can jump online or get on any news station that they follow and get a lot of this information just like we did.
You can get the facts. Now, as a carryover from those facts, what do we think going forward? So the question that we're going to answer from Dave today has to do with inflation. So we're going to hold that one off because one of the major concerns, whenever you start sending people checks and doing big support and stimulus in this way, is inflation going to happen? When people start to have more cash in their pocket, they start to demand more goods, which causes the price of those goods to go up and inflation can start to spike. We'll talk about that from Dave's question because he asked a great one. So we'll talk about that later. But then we also talk about what will happen from this in the short term, from the standpoint of helping the economy and then affecting the stock market. So when we look at this, it will keep people employed, and more people will get jobs from this. You see jobs, the layoffs slowing down and support happening. So what will happen is government employees, I think it's estimated that 1.3, 1.4 government employees will get additional jobs from this, which will help spur the economy going forward. And then also that will then affect the stock market. It will be volatile going forward as there's pressure from interest rates and inflation and increased demand going forward. So we'll see a spike maybe in the stock market as this kind of vets itself out. But as you and I've talked about before, Matt, spikes in volatility in the stock market, even if we're at all-time highs, what's going to happen in the long term? How are we going to get off of this stimulus as an economy and get into a more normalized thing? That's where people, if they're planning for retirement over the next 5 to 10 years, that's where your view has to be.
And that's the people that we are always talking about all the time, that you need to be able to stand on your own 2 feet. You've got to be able to have those 3 C's of retirement locked up. Because if you do not have that checkbook, the calendar, and the clock set up for your retirement income planning as a foundation, and then being able to look at other things on top of that said foundation, if you don't have that set up, then you're automatically starting off in retirement in a possible negative scenario. So that's the last thing we want to do, because as we talk about here on the Income for Life show all the time, our goal is to help you stay retired. 10,000 people retire per day, Nick. We know this as a fact. But staying retired is difficult. So the last thing you want to do is retire at 66 and then try to go find a job at 72 because you ran out of money. Yep. Now, here at Income for Life, on the Income for Life show, what we specialize in is helping you stay retired. So that's why our topic of these alternative investments that we're going to be discussing today are so important for people to understand not only a little bit about what these are, but how risky of a potential proposition can these be? Because if you are looking at these as this is my retirement plan, I think by the time we're done with today's show, hopefully everybody will understand that is probably not a good way to go. Wouldn't you think?
Agree completely. And if we look forward and we kind of understand that volatility is going to continue, maybe some risky, uncharted waters ahead of us as we decide how we're maybe going to pull the Band-Aid off the stimulus stuff or try to thread the needle to make it a perfect pass and make it happen. As we look forward and we know that there's uncertain times ahead, if you magnify it by making some of the wrong or incorrect investment choices, because the news is talking about it or an advisor is talking about it, we don't want to compound the stuff that we almost know is going to happen in the future. We want to make prudent investment decisions, and we do that together by having the information. The stuff that we're going to talk about, Matt, is stuff that's out there in the ether. It's on social media. It is in the news all over the place. We know our clients are hearing about it, but they don't really know what to do with it. So let's dig in.
And just because something is new or in the ether or on social media or a hot topic of conversation does not necessarily make it right. And we do that all the time.
One, it's not necessarily new. And two, it's not necessarily good, especially for a specific segment of people. As we talk about all the time, Matt, staying retired is a different animal. Retiring is a choice, one-time decision. I'm going to retire. Staying retired takes action and work and support, and some of these things are going to work in opposition to that.
Absolutely. So I think what we want to do first, right out of the gate, is let's define what an alternative investment is. So an alternative investment is something that doesn't fall into the conventional cash, income, equity categories. It's an alternative investment. They may not even be regulated by the SEC. We see that quite a bit. And there's very well could be some liquidity concerns with those alternative investments. So let's kind of jump into some of the top ones that people often hear about. We'll kind of go from the more popular down, if you would.
Yeah.
And let's kind of dive into, do these have a play? And if they do have a play, where do we, Nick and I, feel like this play should be? All right. So the first alternative investment that I would want to ask you about here, Nick, is gold, silver, precious metals. Okay.
Yeah.
Very popular alternative investment. You see commercials.
For decades about it.
All the
Yep.
time about investing in gold.
We buy gold. We sell gold. Yep.
Everybody sees them all the time. So why gold? And how does it compare to other precious metal investments? Let's talk a little bit about gold and precious metals.
Perfect. And I think gold is a great example. In the investing world, when we talk about alternative investments, what many people are trying to accomplish with that term and with this investment choice is to have something that is non-correlated. So it is not going to move the same way as the stock market. If the stock market goes down, hopefully this is stable or goes up. If the stock market goes up, hopefully this is stable and maybe counterbalances that a little bit. You want to have a diversified portfolio is what people say. And having things that are non-correlated, they don't move together, is typically a solid investment choice. When we start to get into the specifics of it, let's look at some of these details as to if that actually happens. Gold being one of them. It's on the news all the time.
All the time. You hear about it everywhere.
In other precious metals, silver too, and other things, but gold kind of being the main one. I think mostly back in the day when we were on the gold standard as a way to solidify the monetary policy of the U.S. government, people still look at gold as this almost investment that if our currency, things like inflation start to happen, our currency becomes worth much less, then gold can be a substitute for that. In reality, we've gone so far beyond the gold standard that having gold as an investment doesn't work the same way most people think. You're getting sold something that was of the past. Now, gold in and of itself, we think, has great utility. You're going to get the best bang for your buck in an investment if you take that gold investment and buy something nice and shiny for your significant other and have it as jewelry, as opposed to a retirement investment option. And there's a few reasons why we think that, but mostly people are getting sold gold as an investment when it's really not.
And gold in your IRA, or you can
Correct.
use IRA money to buy gold. And anybody listening right now, if you've watched any television, you've probably seen commercials of companies out there that are offering gold, and gold is going up, and you can move your IRA into gold and all these things. It's interesting the marketing of some of these groups
Yep.
that are taking this alternative investment and really trying to get people to move a significant amount of their nest egg in their retirement into this.
Correct. And you almost know that it's not an investment by the way that it's marketed. People are trying to sell you gold. Why? Because they're going to make a lot of money off of you buying that gold. The margins on it and them holding it and the cash and all the things. It is not an investment. Gold now is not a currency. Having to carry a backpack of gold around.
Not going to work.
You're not going to be able to go into a Kroger's or anything else and start shaving off pieces of a gold bullion brick and have them do it, even if our currency becomes kaput, which won't happen. Gold will not be the next outlet for us to start bartering back and forth. So gold is now not a currency, it's a collectible. And because of that, it's even taxed different than investments and currencies. So you have to look at that. Not only is gold significantly more volatile than most of the investments that we want retirees to look at for the main part of their investing and retirement plan, but it is also taxed differently. So any of the gains that you get from a gold investment, if that is actual gold bullion or you're brokering gold and trying to buy and sell it, whichever, it is taxed at a higher rate, a collectible rate, kind of like furniture or art or anything else, and not at an investment rate. So we have to look at not only how it works in the environment, how you would use it in a plan, but how it's taxed and looked at by the IRS to really define if we think it's a good part of a long-term retirement income plan. And to be honest with you, we don't.
And it's not. And if you want to invest in gold kind of on the side or just for some extra money that is outside of your 3 C's of retirement, then go ahead. It's
Correct.
Completely fine. But if you're looking at that as this is my retirement,
Correct.
You could get in trouble pretty quick.
If you like to collect coins and do that kind of stuff with silver and different U.S. currencies, and great. That is a fantastic hobby, and you can make some money. Having it as an investment choice, especially in your retirement planning, is not the way that we would advise people to go.
Absolutely. Let's go ahead and jump into the next alternative investment that I would say a majority of the planet has heard of. Now, I'm not saying they understand it, but they've absolutely heard of it, and this is cryptocurrencies. The big one's Bitcoin. So Everybody's heard. They don't maybe know how it works, but they've heard the term.
Correct.
So cryptocurrencies, aka Bitcoin for this example, is an alternative investment that people could, of course, jump into, but the dangers, the volatility, the risk of that are amazing. So let's jump into cryptocurrencies, Nick.
Yeah, it's probably the most talked about investment. I'm putting investments in air quotes here across the world right now. It's been around for a decade plus, the construct of it, but it's really gotten to a fever pitch here over the last 12 months, not coincidentally with the spurge of us sending out checks to people. And we can talk about why that might be a correlated event. But when we talk about Bitcoin or cryptocurrencies, Bitcoin has become synonymous as the almost Kleenex of cryptocurrencies. It is the name that we call it. When we think of cryptocurrencies, we think of Bitcoin. Cryptocurrencies are built on a technology that we don't think is bad, called blockchain technology, which helps create smart contracts and able to really be a decentralized look at being able to create things for the future that you can build on a new structure.
Sure.
So the overall technology is great. Now, the creation of coins on that as quasi-currency, like Bitcoin, is a completely other venture. When we look at these things, it will play out in the long term as to how legitimate Bitcoin in general or cryptocurrencies are in general, built on this technology. But as of right now, for retirees, please don't get caught up in this buzz. If your kids or grandkids are talking about it, it is not an investment. It is far from an investment that you would make as far as a retirement plan. If we look back at kind of how, the Oracle of Omaha, who we talked about on the last show.
Gotta love Mr. Buffett.
Defines what an investment is. An investment is something that you can quantify and calculate its value and then make a decision on if you want to buy or sell it. That is kind of his definition of an investment. Speculation, on the other hand, so there's two things. You can either speculate or you can invest in something. Speculation is basically gambling that there's going to be a greater fool out there that will pay a higher price than you currently have right now. And this, cryptocurrencies, are complete definition of speculation.
100%.
Unfortunately,
100%.
There is no underlying utility of them, and there is no underlying function or value. Even gold, who we said is not a great retirement investment right now, but gold has underlying value. You can literally make jewelry that we said would be a better choice for it, and it has a value in and of itself, intrinsic to it. There is no intrinsic value to Bitcoin.
You can't do anything with Bitcoin.
When people stop buying it, the price will go down. And there is no floor to it because there is no intrinsic, inherent value to that construct. It is just right now multiple people agreeing that it is worth something, the definition of a bubble. It is the definition of a bubble. I'm not saying it's going to be a bubble that will break in the near future, but it is the definition of a bubble. People defining that it should be a growing market. It then is a self-fulfilling prophecy, which causes the price to go up. And all you see is the people that want the price to go up push that the price is going up.
Push and hope.
Which then makes their investments go higher. And they're the ones, whenever it hits a new threshold of $10,000 per Bitcoin or $20,000 per Bitcoin, $50,000, $60,000, whatever it is, they're the ones selling.
They got to find somebody that'll buy it.
They are hoping that you go buy it because you think it's the next craze. They're the ones selling to take profits off the table and using this as their kind of almost Ponzi scheme-ish thing to keep this going. Now, the technology that underlies it will be vetted over time, but Bitcoin right now is not a choice. It's not even defined as an investment, let alone one that would be prudent for people looking at retirement.
If you already downloaded Matt and Nick's special guide for podcast listeners called Preparing for Retirement, Ways to Create Your Retirement Paycheck, then skip ahead 30 seconds. But if you didn't download the guide yet, well, what are you waiting for? Learn the difference between lifestyle income and required income. Understand how to address some of the top fears people have about retirement. And the guide even has a checklist to walk you through, step by step, how to discover the income gaps that might exist in your current retirement plan. This guide is absolutely free. All you have to do is email info@incomeforlife.org or call 888-228-8814 and just ask for it. Email info@incomeforlife.org or call 888-228-8814.
The next alternative investment, Nick, that I want to discuss here is one that is very popular with a lot of our clients. It is real estate. And I know that real estate obviously can be an alternative investment for people, but a lot of people do real estate, not only for assets, if you would, but also for an income stream that they can get off of, say, rental properties or whatever it might be. So real estate is a very popular alternative investment that I think that you and I will agree maybe even has a place, but you just have to understand kind of where it falls into what you're doing.
Agree completely, Matt. As opposed to the two other ones that we talked about previously, gold and cryptocurrencies, there is significant value in real estate. And the definition that we talked about before of alternative investments is to have a non-correlation with the traditional stock and bond market.
Correct.
So real estate gives you that function in spades. It can be a great investment asset as non-correlated to what the stock market does.
And an income asset.
And then on top of that, you can get income off of it. Now, there's multiple ways that you can invest in additional real estate. If you're a homeowner, you already are, but you can have additional rental properties directly that you can create. Those come with their own obstacles and ordeals that you have to be able to, you got to want to manage it, keep it up, do all that kind of stuff.
Commercial or personal.
Commercial or residential, exactly. And then there's also specific investments called real estate investment trusts that allow you to not have to do the management, but can invest in real estate, commercial or residential in general. That can be options. Now, what you have to look at is, what are these investment options and how would you utilize them for what percent of the amount of stuff that you're going to do in retirement? We do not think that they are a full-blown way of investing for retirement in the way that we look at it. One, because as you're going into retirement, being land or home real estate rich and cash poor is not a great way to be going into it. Since these investments are kind of on the illiquid side, you can't turn them into cash that easy. You have to find a buyer, and that can take some time. We want to have a balanced look at where real estate on the investment side or on the actual you owning additional properties directly, where that fits in a retirement plan.
And you can usually, what we often hear is, well, I'll always find a renter, or I'll always find a buyer, or it's very easy to move this if I need to. It's very easy to find that renter. And right now that very well could be true. And I'm not saying that's not going to be true later on. However, this is a type of an investment that requires actions from others. It requires somebody else, in essence, making a decision to do that. And I'm not saying you're out of control of that, but it requires other people helping you out in order to have that set income.
Exactly.
And whenever you are planning your retirement and you have your retirement income and you want to set up those 3 C's of retirement, relying on an outside source, no matter how viable or how risky or not risky that is, relying on somebody else to take action is a risk that a lot of people are not comfortable with doing with a big chunk of their retirement, don't you think?
Exactly. And this is a subject, an area where you get a lot of people that really specialize in this, and they are experts in it. They are experts in evaluating properties, renting them out, managing them, finding renters.
Done it for years, and they've been there, done that.
And they talk about it as it's the greatest investment in the world, and it is for them because they really know what they're doing. They know how to subcontract things or fix it themselves. They really understand the marketplace and know what they're doing. That then causes other people that aren't as familiar to look at that and say, could I get into it? It is not impossible to learn, but there is some hurdles to overcome to really get into it and do it right. That's where figuring out how you want real estate to play in your overall retirement portfolio can be a great conversation with an advisor like us to see what we think it will do for you, how you want to partake in it, and find the right vehicle for you to do that.
And we like it. We like that idea. We're just not sold on that should be your primary source. That should not be your number one retirement vehicle. Shouldn't be real estate, but we're also saying if you have that opportunity, it very well could have a positive effect, but don't make it my single retirement plan is real estate, okay? So now let's jump into the next one, and the fourth one down our list. We're going to talk about commodities. We got oil, grains, coffee, whatever you want to talk about when it comes to commodities. They are deemed an alternative investment, but they're very popular.
Correct.
A lot of people have heard of commodities, so let's jump in about that. What is there to know if somebody wants to invest in commodities that they should be considering? But also, this is one of those that just because it's known and just because a lot of people have heard of it, you still should not have this as your primary income vehicle in retirement. Agreed?
Agree, and definitely one that people are familiar with. They understand, especially where we're from here in Kansas.
Here in the
commodities,
Midwest, right.
Specifically grain and cattle, it's a major talk. And people that are in those businesses understand how to do this. Typically, when we look at investing, we don't typically include commodities as an investment option. It definitely is alternative because it is not correlated with what the S&P 500 or Dow Jones is doing. It is a completely separate
kind of
animal.
its own animal.
Yep, exactly. And no pun intended for the livestock people out there. But it is its own thing. And traditionally, when you look at investing for the long term, commodities aren't part of that. They are an asset that is traded. You trade to hedge these prices, looking forward and then looking at what you have. And that's not typically a way that we want people to get into it. We would rather them investing for the long term, not trading day in and day out, looking at day trading as a thing. And these things are much more set up as small price movements to be able to lock in those prices, calculate that gain, and then hedge against any losses as a trading mechanism, not necessarily a retirement investing thing.
And if you have a good commodities broker in whatever commodity that you're working in, if you have a good broker that is staying on top of this, then you can do very well with commodities. And if that broker is staying in cahoots with you and knows the signals and whatnot, then you can do well with commodities. But you just have to understand where they rank volatility-wise, where they rank hedge-wise, all these things for retirement and retirement income planning. Again, it's kind of comparable to real estate in the fact that you can do well.
Yes.
It absolutely requires other people helping you out with this, but it's still not this should be my primary focus in retirement planning.
And commodities in general is so diverse. You can have, oil as one is a very different marketplace than grains. Grains are a very different marketplace than livestock. And then in livestock,
on.
You can chop that up even more. So if you have an expertise in an area or have an enjoyment in it, you like that, and you want to put some of your money to it. There are definitely mechanisms to do that. But as Matt said, having it be the mainstay of what you want for retirement income planning, we don't look at it as the core.
Right. And it's interesting when I talk to so many people that do, use commodities, and they usually love them. I mean, but it's usually designed to be something that is kind of on the side. It's
Correct.
it's something that they like to do. There's some people that would, just like to dabble in the S&P 500 or the NASDAQ or whatever it might be. There's people that just absolutely like to get into the ag commodities.
Correct.
So it's out there, and you can do well at it. You just got to be careful, and you have to understand that it's not designed to be a primary player for retirement.
From an investment standpoint, yep.
Now let's jump into the next one that a lot of people haven't heard of, but it's important because it's generating a lot more traction. It's a lot more people are starting to dive into these what are called SPACs, S-P-A-C. They are special purpose acquisition companies. And basically what those are is a company or investment that is built to specifically acquire other companies. And you can make some money at these. You can absolutely do it, but you also, again, you have to understand how these work. So let's jump into these SPACs, or special purpose acquisition companies. Nick, tell us what they are.
Yeah, it's one of those things where a SPAC, as an acronym, a special purpose acquisition company, or also called a blind check company, is not a new investment. But over the last 6 months, it's become this thing that's talked about.
Become very popular now.
Way more than it ever has in the past. And when you look at it, as Matt mentioned, it is kind of a different way for companies to go public. It is a different, easier route for an IPO, an initial public offering. And basically what you're doing here is you are investing in a person or a group that you're handing your money over. You're basically giving them a blank check, and they are then going to in turn try to find a company, maybe in a specific sector or industry, to then go buy and take public. And once that process happens, you can make some money off of this thing. Now, it becomes a process that is very speculative. It goes beyond the traditional investing standpoint. Technically, is it an investment? Yes, it is an equity investment, but it goes much more towards speculation because almost in the definition, it's blind. You don't really know what you're investing in. You know who you're investing with. You know the people you're turning your money over to, but you don't know what they're going to buy. And if we hearken back to our friend Mr. Buffett, if you don't know what you're going to buy, you can't quantify or evaluate what you're going to buy, and hence it's no longer a investment that we should probably be looking at as an option.
And whenever we're talking about these sort of special purpose acquisition companies, and I think you hit something there that might make a lot of people a little bit nervous that are listening to what you're saying right now, because when you are investing in this sort of a structure, you are giving what you said, a blank check to a person or a group of people at a firm, whatever it might be. You're giving money to a person not knowing what that person is going to do with that said money.
Correct.
You don't know. You get the idea, you get the 10,000-foot view of what they are trying to do, but you don't know. And so giving money blindly is risky.
And not saying that these are terrible investments. They can turn out great. It is just an unneeded risk for most people that are planning for retirement to have this kind of opaque, unclear view of what's going to be invested. And there's another layer on top of that is, obviously, if this is a simplified IPO, initial public offering, that means that even the company that they choose after you've given your money over is a non-publicly traded company at the time. They want to take it public. So it being a non-publicly traded company, there's not that much information out there. And it's tough to get information on that company, how much money they make, what their valuation is, how many employees they have, what industry they're in, what the outlook of that industry is compared to competitors. All of those things that you want your investment people to be doing to say, we're going to choose this over this. This is a tough vehicle, a tough investment choice to really get that clarity. So on the speculation side, this is much better than cryptocurrencies. but you have to be very choosy in what you're doing and understand where it plays in a small portion of a portfolio that is not at all relied upon for what we like to talk, Matt, the 3 C's. This has nothing to do with your retirement income plan. This is an additional investment for a small portion of your stuff.
And there's a lot of trust that has to go in to this sort of a strategy.
It's mostly choosing who you're handing the money over because you don't know what they're going to do. So
you don't know what they're going to do. You got a very good idea of what they're going to do, but you don't know what they're going to do. So this one, the trust factor has to be at an all-time high with this. And like you said, Nick, people can make a lot of money doing this, and they've been doing it for a long time, and I get it. But handing over a blind check in retirement is much different than handing over a blind check when you're 40, for example. So again, good way to potentially make some pretty good money, not a good way if you're wanting to rely on it for your income for retirement. You can't do it.
Exactly. And any time that something's been around for a while, but you've never heard of it, and then all of a sudden it pops up like it's the newest, greatest investment option and investment vehicle in the world, take a little hesitation, understand what you're getting into. Typically, they're doing that to raise a bunch of money. Not that it's the greatest investment vehicle for you. They're trying to raise a bunch of money to go do what they want. And now's the time with the influx of people getting cash, tax breaks, and a bunch of different things.
Perfect time to do it.
It's a perfect time to do it. Along with cryptocurrencies, we've seen the rise of this when all of a sudden a bunch of young people have an additional $1,400 or $2,800 in their pocket that they may not need to pay rent, so they're buying some of these more speculative assets, which then creates a self-fulfilling prophecy.
Which is why they're always looking for an alternative anyway. They're looking for something different. And whenever you can come up with something different and market it heavily, like cryptos, like, for example, these SPACs, like gold that we see all the time on television, when you can really market an alternative to the norm, and right now people are scared to death of the norm, then you can really get a lot of traffic on these alternatives.
And looking for a quick buck as opposed to investing in Ford for the long term, let's look at something that's more speculative, more gambly, and I can make more money quickly. Well, with that comes a lot of risk as
Absolutely. Now let's jump into our next alternative investment that we want to talk about, and we'll hit on this one pretty quick, but it's private debt or direct lending. So it's loaning money to private companies. It's not liquid, or at least not very liquid at all, and varying levels of risk and return, and some see it as more profitable alternative than U.S. Treasuries. And private debt and direct lending it's an alternative investment, but it's one that some people don't really think of too often. What are your thoughts on those?
It comes into ultra high net worth people have been doing this for decades, forever. High net worth people, the next rung, have now gotten more into it as an option because it's become easier to actually do this investing, a little bit simpler to be able to find it. But again, it's those investors they're searching for yield, especially in a place that is yield starved. You can't just, as Matt and I've talked about before, you can't just put money in the bank and earn
anything
and earn 8% anymore. You can't put money in bonds and earn anything anymore. So these companies are looking for venture capitalists or angel investors to invest in their company. They're giving high yields out in this, but it is a very speculative nature in the investment. Tough to do. For those high net worth clients that are listening to this, if you're interested in stuff like this, we can definitely give you a conversation around it. But for the main of our people that are listening, we don't look at this as a tried and true way to guarantee retirement lifestyle money, the need to money. And it's definitely not part of our retirement plans, the 3 C's. It can be an additional one for certain clients that have the money to be able to do it and want to, and maybe understand a specific industry that they want to lend money to. But in the main, it's not something that our clients typically get into.
And they can if they want. They can study up on it as they want, but it's just not a popular way to go for, most Americans that are just looking to retire here in a few years and want to ride off into the sunset and have a comfortable, safe, happy retirement.
And typically this is used, it takes a lot of money to do this. Not just a lot of money to be a part of it as a high net worth investor, but in order to make an impact, you're not just tossing $500 or $1,000 to a private company and they're going to pay you 8% yield or 12% or whatever. This tip, you're getting into the hundreds of thousands of dollars of minimum investment to be able to do it, which then eats up a large portion of most of retirees' plans, hence taking up too much of their retirement income that's needed for other things.
Absolutely, absolutely. Good information that we talked about here. And what we want to finish up for our last alternative investment topic or conversation, before we jump into our mailbag here from Dave in Boston that had a great question for us. But while we finish up here on alternative investments, let's kind of bring it back a little bit, because there's a lot of people out there that are listening that have heard of a majority of these alternative investments, if not every single one of them.
It's in the news now more than ever.
And a lot of people are starving for that alternative, right? They see things that are happening, for example. They understand that the economy's struggling. They'll understand that maybe the stock market is too top heavy. There's all these things that are weighing on them to make them look at these alternative investments more, and the marketing of these alternative investments, like for example the gold and the cryptos and everything, are everywhere.
Correct.
So the sizzle of those in correlation to what else is out there is appealing to a lot of people. But when you're talking about the 3 C's of retirement, when you talk about the checkbook, the calendar, and the clock, having a guaranteed income all the way through retirement that lasts as long as you do, sometimes going back to the basics and going back to what has already been in that world and in that industry sometimes is the best way to go.
We think so, Matt. And as you said, the sizzle is what gets marketed. The sizzle is what makes headlines. The sizzle is what makes the Wall Street Journal. It's not the tried and true way. So if we get back to the beginning of this conversation, what is an alternative asset? That diversifier, that non-correlated to the S&P 500 or the Dow Jones type of investment that will help solidify a plan and help balance out a plan of investing for retirement. We look at many of these as not great options. The one that we do talk about as the foundation of a retirement plan is retirement income insurance, that personal pension plan that guarantees you get out of the normal market volatility and start to collect a paycheck that you can't outlive. So you solidify your bills and your need to money. And then we can talk about the other stuff after you've solidified your 3 C's, but getting some insurance for your retirement income plan is, we think, the best alternative investment, the best hedge for market volatility that's out there.
And there was a rather famous person many, many years ago that stated, insurance is boring just like we like it. And that was Benjamin Franklin.
Yep.
So we understand, insurance is not the flashy way. I often call it the minivan of retirement planning. Okay?
It gets you there.
But it'll also get you to point A to point B, and it'll 40 miles to the gallon and safety rated.
And take a lot of people with you.
So we understand that whenever some people say insurance, oh yuck, I don't want to do that. Nobody wants to pay for insurance. I understand it, but everybody wants what insurance does.
Correct.
So if you're talking about a pension income, guaranteed lifetime income, whatever you want to talk about, that's what we're talking about whenever we're talking about the insurance way. And is it boring? Sure. That's exactly what it's supposed to be. Social Security's boring too. But last time I checked, you're going to cash that check every month.
Correct.
That's going to go into your account every single month. Boring. Okay, fine. There's my Social Security check. Just do more of that.
Once we take care of the steak, which we call the 3 C's here on the Income for Life, once we take care of the steak, then we can get into the sizzle. We can get into the more fun, sexy topics and try to diversify your investment side out. More than happy to do that. But before we do that, we got to take care of your retirement income and your ability to not outlive that retirement income.
That's why you build a house from the ground up. You don't start at the top and build down. You start at the foundation and build up.
You can't speculate and stay retired.
Perfect.
It is almost impossible.
You've got mail.
Now let's jump into our IFL mailbag, and we discussed this a little bit earlier in the show. We were talking about Dave in Boston because he had a great question that had a lot to do with this upcoming stimulus that is coming, because we are all of the view that with all of this that is coming, inflation is going to be a major player, major factor. So we appreciate Dave in Boston bringing up this question. And of course, if you're listening right now and you want to submit a question to our IFL mailbag, you can do that by emailing us to info@incomeforlife.org like Dave did, and we'll do our best to grab that question and answer it on the air. And we try to grab questions that we feel everybody kind of is on the same page, and we get a lot of the same sort of questions. So Dave has a good one. So Nick, I'm going to share it with you, and let's talk about it. Dave in Boston is asking us, it seems like inflation hasn't been very bad recently. Should I be worried about it in the future years? Ironically, Dave, yes. You very much should be. We got a lot of money coming in on these stimulus. We're going to have a lot of buying. There's going to be inflation that is going to be increasing. Don't you think, Nick?
I do, and Dave is not the only one that's worried about this, and he's not the only one of our clients that is asking us about this.
Big question all the time.
But the economists, the Federal Reserve, everybody, the massive Wall Street banks, this is the topic that everybody's worried about. Whenever you start to inject artificially trillions and trillions and trillions of dollars of cash into an economy, that can cause inflation. And it basically, in this side of it, it can cause it from a demand side. People have additional cash in their pocket. It's burning a hole in their pocket. They want to then go buy things, if that is toilet paper or Nike shoes or vehicles. When there is more demand than there is supply, it causes prices to rise. I don't want to oversimplify it, but that's what we're worried about here. What we'll find out is, and I think this is for this week, I think the Fed is going to have a meeting this week and come out and talk about what they expect they want to do for the future, and I think give more insight as to how they're going to view inflation going forward. Are they going to continue buying government bonds to keep inflation low artificially and interest rates low? And if so, how long are they projecting that they're going to do that? And at the end of it, are they going to give us any clarity as to, are they going to pull the Band-Aid off quickly? Or are they going to try to wean us off of this and thread the needle perfectly so that we don't feel any ramifications of this? Either way, we're going to have some volatility in the future. It's either going to be some quick volatility when they rip the Band-Aid off, or this continued uncertainty.
Which is where we've been for how many years now?
Correct.
10, 11 years, maybe longer?
And either way, if you're planning for retirement, one of the things that we have to look at is, where's the stock market now? Where do we look at it in the short term? What do we think long term? Where are you at in your investment plan? And we need to hedge, have some non-correlation for our income plan, for inflation, and ongoing market risk. And we need to start solidifying your 3 C's, because inflation is a massive concern, Dave. Great question.
Great question,
and
Dave.
how we tackle it is an individual plan basis, and a lot of it depends on outside circumstances.
And it's a tough question to answer right now, because there's so many moving parts that are going right now with the Fed, like you just talked about, Nick. And there's a lot of things out there that could sway this, or there's a lot of things out there that could just keep it status quo. So we're not really sure. I mean, a lot of people are like, rip the Band-Aid off. Let's get this over
Correct.
with. Let's, go through a little bit of pain and get this fixed.
That's the debate, Matt, right now.
Or leave it alone, right?
Correct.
And just kind of kick the can down the road, so to speak, and just keep the rates low and just slowly dip our toe into this.
But at some time, somebody's going to have to pay the piper.
Sooner or later, it's going to have to
And
move.
if you're retired or about to retire and that comes to fruition, then it will change your plans for retirement. So we got to start to stabilize this stuff as quickly as we can. Make a plan that is adjustable for the nuances going forward and can help you hedge against inflation on a go-forward basis.
Control what you can control.
And control it when you can control it.
And right now, it is a golden opportunity to do that. So, Dave, thank you very much for submitting that question. Again, if you'd like to submit a question to our IFL mailbag, you can do so by sending an email to us to info@incomeforlife.org, and we'll do our best to get that question answered on the air for you. We got a lot of questions that come in from all over the country. Dave in Boston, that was a good one. So we appreciate you very much for submitting that to the Income for Life mailbag. And as we wrap up, Nick, we got a very popular time going on right now here all over the country. And it's something that we had sadly missed out on last year, but we got the Ncaa basketball tournament that is ramping up this week. And it's going to be a fun time, and I'm glad to see this tournament back since we missed it last year.
Exactly. I'm just glad that collegiate athletics are back. I know that, in a lot of different sports, everything got cut off a year ago.
At about now,
about
right now.
A year ago now, everything just stopped. If it was even high school, state championship events and different things, it's so awesome to see, even though it's different, it's not the same as it usually is with packed houses and everybody going crazy about it, but just being able to have competition, just being able to have some normalcy with it, should be fun, should be a great tournament.
It's going to be fun. I'm ready for this
one.
One.
It's an open. The Blue Bloods aren't the Blue Bloods this year.
Boy, they are not.
So it's really open. We got some great teams, and we're excited about it. Basketball is basketball here in Kansas.
And we're here in Kansas. Of course, the KU Jayhawks are the big ticket here when it comes to basketball, and of course, all over the country. Everybody knows who the Jayhawks are, and they're kind of in a little bit of a down year as well. I think they're a 3 seed going in, which is a little bit low for them typically, but the Dukes and Kentuckys of the world are not even in this thing, so we're doing all right.
Correct. So should be a fun one. Hopefully we got more to talk about the next time we get on the show about what's happening in the tourney.
But for right now, I'm just happy to have the tournament back. So good luck to all the teams out there. I got my bracket ready to go. I know we talked about it, Nick. We're pretty close on who we're picking. We got the same teams in the finals, but we got them flip-flopped on who's going to win.
Exactly. You think the Illini got a shot, and
I'm going Illinois.
And I'm going with Gonzaga.
Gonzaga is in my final as well, but I think Illinois is going to take them, so we will see. I got to give a shout-out to old Brad Underwood. He's a Kansas boy, so Brad used to be at K-State.
Done a great job and got a great squad this year.
He's got a great crew going there at Illinois. But again, everyone, thank you very much for listening to the Income for Life show today as we talked about some alternative investments out there and whether you should ignore them or maybe jump all over them. Hopefully we gave you some good insight on what we think on some of these. And if you ever have any questions that you would like to get a hold of us specifically, give us a call at 888-228-8814. Again, that is 888-228-8814. 8814, or simply email us to info@incomeforlife.org. We will, of course, answer any question that you might have. We can set up a time to get on the phone with you and be able to do our best to help you stay retired. Thank you again for listening today. We appreciate it. For everyone here at Income for Life and Folds of Honor, have yourself a great rest of your week, and bye-bye for now.
Thanks for listening to the Income for Life show. If you have any questions about something we talked about today or want to get in touch with the Income for Life team, give us a call to 888-228-8814. That's 888-228-8814. You can also go online to incomeforlife.org and check the description of today's show for any relevant resources and contact information. You can also find the podcast on all major podcasting apps, including Apple Podcasts, Spotify, Google Podcasts, Stitcher, and many more locations. The Income for Life show is powered by Folds of Honor, a 501c3 nonprofit organization dedicated to providing educational scholarships to the families of America's fallen and disabled service members. For more information, visit foldsofhonor.org. Information provided on today's show is for informational purposes only and does not constitute investment, tax, or legal advice. Information is obtained from sources that are deemed to be reliable, but their accuracy and completeness cannot be guaranteed. Always consult with a qualified professional before taking any action.